You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Welcome back to Mining Stock Education. I am your host, Bill Powers. Thank you for tuning in. Well, a couple weeks ago, we featured Idaho as a mining jurisdiction in a recent episode. There is a renaissance of mining, in particular of gold mining, that's occurring in the States. And one of our sponsors is located in that state, Otis Gold Corp. The company's website is otisgold.com, and it trades in Toronto under the ticker OOO, or in New York on the OTC under the ticker OGLDF. Its flagship project is called Kilgore, and this is almost a 1 million ounce resource, PEA stage development project. Showed very good economics in its PEA that was released, which we have featured in an interview probably about 6 months or so ago. There was one issue with this project, and it related to a contesting with the U.S. Forest Service over the Kilgore exploration permit, which is needed so that the company can further find and demonstrate mineralization and advance the project. Well, the federal court issued its final judgment, and Otis is in the clear, and the project can move forward unencumbered by any contestation and any confusion that would bring around this project or the company. And there have been a couple of press releases, more technical press releases that the company has released in the last month about this project and its advancement. So we're going to be hearing from Craig Lindsay, the president, CEO, and founder of Otis, as well as the vice president of exploration, Alan Roberts. He joins me. Alan does first. So Alan, welcome back onto the show. I spoke with you at Beaver Creek, and you were featured on this show. Tell us what's going on with the Kilgore project, and perhaps you can start with your press release that talked about some of your recent metallurgical results.
Yeah, thanks, Bill. It's great to be on your show. And in December, we concluded nearly a year's worth of metallurgical testing on some near-surface rock and from drill core, and we got some great results. Our 0.5 crush material for testing came back with in excess of 90% gold recovery, and our other 1.5 and 3-inch crush also came back with very positive recoveries. We used 80% in the PEA for metallurgical recovery for half-inch crush, and so having greater than 90% will seriously enhance or significantly enhance the economics of the Kilgore deposit, because half the material of the high grade, averaging grade of about 0.72, would be the half-inch crush material at about 15,000 tons a day. So that's really, really encouraging, and it has a significant positive effect on the economics with the current gold price.
And how do these metallurgical results compare to your fellow gold mining projects in Idaho or even in Nevada nearby?
What's most interesting about the Kilgore project is how heap leachable the mineralization is in the volcanic hosted rocks. It's, numbers up when you get greater than 90% recovery from a leach pad test, and these were column tests, these weren't just desktop bench top tests. It really puts us up there as a direct competitor with any project in the South and Western United States in respect to recoveries, both at run-of-mine grade and at the half-inch crush that we propose for half of the mineralized material.
Can you explain for listeners that don't know, when you say run-of-mine, that is something you featured in your PEA. What do you mean when you say run-of-mine?
What we call run-of-mine is when the rock is drilled and blasted, and then it is literally picked up by a loader, loaded into a truck, and it's taken straight to the leach pad. There's no ancillary processing of that material, and that is a way of significantly reducing cost for any operating mine.
Therefore, you can have lower grades of ore and still possibly be profitable. And I think that's something we want to point out here as we now talk about your most recent press release released on February 5th, which you entitled Otis Significantly Extends Mineralization at Kilgore. Some of the grades weren't, the spectacular grades that everybody oohs and ahs about, but because you're talking about a run-of-mine project, you are actually very satisfied with these results. Tell us the significance. What are some of the key takeaways with this most recent release?
The key takeaway from the release is that we broke it into exploration and away from infill and development drilling. So we had a 14-hole program planned. We completed 11 holes in very difficult weather conditions, and we had some mechanical issues with some of our contractors. But overcoming those, we moved forward and we produced, our exploration results. And we had 3 holes that produced very interesting results. The most significant was hole 19 OKR 384, which we came back with 185.5 meters of 0.23 grams per ton gold. And to most people, those grades, it's very low grade. But in respect to the metallurgy, and we're talking of the run of mine, the PEA had an average grade for run of mine of 0.24 grams per ton. So that interval is right in our run of mine grade. We're talking 0.01 gram per ton difference between the intercept in that hole and our average run of mine grade. And I point out that's the average run of mine. So we have lower grade material, we have high grade material. But that hole basically drilled to the west of the current resource shows that we have significant potential in the near surface, in the volcanic host, in the volcanic rocks, that we can do further drilling on and then directly expand the resource by doing that drilling. To further the point, Bill, the success that Otis had in the courts with the defense of the Forest Service permit plan of operation for 140 sites, 420 holes being approved means that we can go ahead and advance the project unencumbered by further litigation at this time. The Forest Service and Otis are both very happy with the result, and I think it shows that if you do good work, and even when you're taken to the courts, having done the good work and having backed it up, we can go ahead and do the work in a responsible manner.
And if I recall correctly, you said in our first interview, if it wasn't in the interview, you told it to me personally, but you became a part of the Otis team and got excited about the Kilgore project because of the exploration upside that you saw, the potential, and now some of that has been confirmed with this drilling.
We've confirmed the exploration potential immediately around the Kilgore deposit, but it in no means does it take away from the target-rich environment that the Kilgore caldera, which hosts the Kilgore deposit, represents. So I'm still excited to do all of the exploration on the rest of the project area that Otis Gold holds.
This drill program was a smaller drill program, but it's the first stage of a larger planned drill program that the company announced. Can you put this smaller drill program in the context of the overall plan of development here?
We were looking to put in a short program, relatively low cost, to make sure that we had exploration potential immediately around the Kilgore deposit, and the program in 2 areas to the west and the south successfully showed the potential for adding near-term resource to the Kilgore deposit. The 70-hole program that we have, of which the 11 holes we drilled was part, we'll expand that out into the prospect areas around the Kilgore deposit. Most people have heard of Gold Ridge or Prospect Ridge or Dogbone Ridge, and we hope that in the summer, fall of 2020, we can go ahead and start putting exploration holes into some of those extremely attractive targets.
Alan, as we conclude this segment, is there any other thoughts of pertinent things you would like to share with the investors listening to us?
Yeah, Bill, I'd like to just have everybody understand that exploration is a hit and miss business, and that every hole isn't going to come back with 5 meters of 50 grams. An intercept of 158 meters of 0.23 grams in a low-grade bulk disseminated target like the Kilgore deposit is extremely exciting because it is the mineralization that we are principally looking for and forms a large part of the deposit. So I want your listeners and potential investors and current investors not to lose faith because these results don't look impressive or are not significant, because they need to be put in the context of the style of deposit that Kilgore is.
You've been listening to Alan Roberts. He is the Vice President of Exploration for Otis Gold. Now you're going to be hearing from Craig Lindsay, the President and CEO. Alan, thanks for coming on the show.
Thanks, Bill. Thanks for having me.
Now I am speaking with Craig Lindsay. He is the president, CEO, and founder of Otis Gold. Craig, welcome back onto the show. And my listeners just got a geological update from your VP of Exploration, Alan Roberts. Thanks for coming on the show. And with that recent press release regarding some of those step-out holes at Kilgore, I'm curious, what type of feedback have you been getting from investors, calls you received at the office, and what would you like to share with the market?
Sure. Thanks, Bill. It's good to be back on the on your show. Really appreciate the interest in what we're doing over at Otis. And yeah, we've had quite a bit of feedback and interest in the news that we put out yesterday on our drill program. And I think the elephant in the room is that our big hit was 160 meters long, but it was only 0.23 grams per ton. So there's definitely been some conversation with shareholders about what happened to the 2 gram plus hits that you were getting up at the north end of the deposit. So we have been managing that a little bit, but the reality is it's a volcanic hosted epithermal gold system, and it's a sub 1 gram per ton deposit. We've got about 950,000 ounces of gold there. Most of that material is hosted in an oxide environment, and most of that material has very strong metallurgical characteristics that Alan has talked about, number one. Number two, we've got a strip ratio at Kilgore of 1-to-1. So you're moving one shovel of waste for every shovel of ore, and that's a very attractive strip ratio. So the fact that it's oxide, it's good metallurgy, and it's a low strip ratio environment allows these types of deposits to be economic at much lower grades. And the preliminary economic assessment that we released in August of 2019 supports that notion. Specifically, that deposit is going to be producing gold anything above a grade of 0.15 grams per ton. And that is, people have to get their heads around that. There's a lot of deposits out there in the western U.S. that are open pit, heap leach gold projects that are producing at grades of 0.15, 0.2, 0.3 grams per ton. And you can make money on those types of deposits, and the economics can be very good. Our PEA, for your listeners, if you recall, it's using a $1,300 gold price, and our after-tax IRRs were over 30% with an average grade of less than 0.6 grams per ton. So that has been a bit of an education over the last day or two. And so with this, let's take a step back even further, Bill. And I've been out on this project for 10 years. And when you look at the history of Kilgore, in the mid-1990s, Echo Bay Mines was going to put an open pit heap leach deposit into production. They had identified about 350,000 ounces of gold, and the average grade was a little over a gram per ton. So when we first came out here, we were looking for this 1 gram per ton plus oxide deposit. And so we didn't look at a bunch of the lower grade hits that had been drilled historically. And fast forward to the PEA, when we demonstrated that anything above 0.15 grams per ton could be economic at Kilgore, Alan, who you just heard from earlier, Alan Roberts, our VP Exploration, said, Craig, you've got to go out and look, for instance, at hole KG 85-5, which hit 100 meters of 0.26 gram per ton material, and it was 200 meters west of the existing deposit. And Alan said, Craig, based on our PEA, if we can link up that historic hole with our deposit, there's the potential to add a significant sea of lower grade material that we've proven can be economic because of the low strip ratio and the very good metallurgy that we have. And that's exactly what Alan did with hole 384 that he drilled. Yeah, and that's what he accomplished with that drill hole. And we think going forwards with about a 15-hole drill program focused on that new emerging west zone, there's a potential to add 200,000 to 400,000 ounces to the deposit of material that's going to be mineable potentially, and that is exciting. And for a $2.5 million drill program to add 200,000 to 400,000 ounces, your drill discovery cost is extremely low.
When an investor assesses exploration and development companies, one of the metrics that's often employed is how many ounces in the ground relative to the enterprise value of the company. And when you dig deeper, as you progress in your knowledge as an investor, you quickly learn that not all ounces are created equal. So one of the things I hear you communicating here is that you have the excellent metallurgy. That's one of the key points of what your project offers. And I'm curious, have you compared your metallurgy and the results you're getting so far with this, from being able to extract gold from this low-grade material? How does that compare to some of your peers, not just in Idaho, but maybe even in the region at large?
Well, I think it compares favorably. And what your listeners should be doing when they're looking at a gold deposit, they shouldn't just look at the ounces and the grade and kind of go, wow, that's a lot of gold. It's well over 1 million ounces and it's over a gram per ton, or whatever metric they're going to use. They need to go and look at whether or not that particular deposit is mineable. So they have to dig down and look really closely at metallurgy. They have to look at processing costs. Can you dig the stuff out of the ground, drill, blast, and throw it onto a heap leach pad? Or do you have to crush it down to what some of us in the industry refer to as bug dust, like really crush it down before you can extract any gold from it? And the more crushing you have to do, the more the higher your processing costs. And not just how much do you have to crush, but can you throw it onto a leach pad, or do you have to process it through a mill? And so every ounce in the ground is definitely not created equal. And certainly at Kilgore, when you've got an oxide deposit that you can drill, blast, and throw onto a heap leach pad and recover gold at good recovery rates, that is very attractive. And we definitely compare favorably with a lot of the open pit heap leach stories, particularly in Nevada, but also some of our peers in Idaho and elsewhere.
Previously, if I recall from our conversations, you said that when majors are looking to, or mid-tiers are looking to purchase a project, they'd want minimally 10 years at 100,000 ounces a year production. Based on these new results, can you, and of course it's a forward-looking statement, but can you talk a little bit about the potential you see here? I know you have a drill program planned for the future at Kilgore.
I mean, definitely one of the big positives of Otis is that Agnico Eagle owns about 8% of our company. They bought into the story coming up on 3 years ago. And they were really excited about the potential for not just the existing deposit, but finding the second and third deposit out at Kilgore. And they definitely want to see profiles of, 1 million ounce. They really want to see 2 to 3 million ounces with 100,000 ounce a year plus potential. And that's definitely where we are moving with the drilling that we've just recently accomplished. Right now, we're at 110,000 ounces a year with a 5-year mine life. And we see the potential to to start moving closer to a 10-year, 100,000 ounce a year mine life with these new discovery holes that we've had out to the west.
And how many meters of drilling do you expect to put in at Kilgore in 2020?
We would really like to do this 2,500 meter drill program that we just accomplished was part of a larger planned 25,000 meter drill program. So we've got over 20,000 meters of drilling ahead of us that we would like to do at Kilgore in 2020. As I've mentioned, there's going to be a portion of that is going to be focused on resource expansion at the existing deposit. But the other thing, and that's the second prong in our approach at Kilgore, is going out and doing exploration drilling along the Kilgore caldera at this 15 kilometers of strike length that we have, where we've got gold and soil anomalies running along that entire distance. And we want to start focusing as a second track at finding the second and third deposits that we think are out there at Kilgore.
Craig, I know the last year was challenging with the contestation of your exploration permit at Kilgore, and I did mention in the introduction before I spoke with Alan that was resolved to your favor. So you know very well what it's like to battle a permit when it's contested, but you've also been the beneficiary of a permit that was issued quicker than some permits have been issued in the past. As a Canadian working in the States, do you have any observation of the mining permitting structure and trends we're seeing?
Well, honestly, as a Canadian, it's actually refreshing to be working down in the States because, believe it or not, the permitting regimes and environment in the U.S. Are, I think, somewhat more favorable because in Canada, layered on top of all the regular environmental hurdles that we have, there's a significant First Nations issue that you deal with in permitting in Canada. So there's a little bit less of that in the United States. But probably one of the things that's been emerging from a U.S. perspective is the U.S. administration's focus on accelerating timelines for permitting, and not just in the mining industry, but the oil and gas industry, infrastructure, building roads, highways, bridges, that sort of thing. The administration has brought in a regulatory change where they want environmental assessments completed within 12 months, and they want environmental impact statements completed within 2 years. And right now, I think the average in the U.S. is about 4.5 to 5 years for an EIS. So that is a significant change, which is going to affect positively mining exploration and mine development activities in the United States. And I want to caution readers that this is not an effort to reduce environmental burdens in the United States. It's just getting the federal government and the regulatory agencies to work more closely together in what they're calling a one decision policy. So we're still going to be up to the very high standards that the NEPA has in the U.S. It's just going to be a more efficient permitting system, which is going to significantly accelerate, permitting in the U.S.
Craig, as we conclude, is there the future plans at Kilgore and also your exploration project Oakley requires money? Is there anything you can update the market on at the time being?
Well, that's a good question, and we're in a position where we do need capital to advance our development plans. And all I can say right now is that we're working on a couple of strategic initiatives to address that issue. And I'm confident we are going to have capital in place to move our projects forward on a timely basis.
You've been listening to Craig Lindsay, President, CEO, and founder of Otis Gold Corp, exploring and developing in the Idaho in the United States of America. As we mentioned, the ticker symbol is OOO in Toronto and OGLDF in New York, and the website is otisgold.com. Craig, thanks for coming on Mining Stock Education and providing an update. I appreciate it.
Thank you very much, Bill. Really appreciate it. Good to chat with you.